Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. Guys, they're not going to tell you we're going into a recession, but we are. And we have a chart that tells us with 100% certainty that we are. Let's take a look.
Trade Genius.
So Bob, I know we flashed unemployment numbers and things like that before, but this, I think, puts any questions to rest here with this chart because it's just, the accuracy is just unrivaled.
Yeah, as a 100% correlation. So if you want to pop the chart up, it's the SAM rule, SAHMS, and it basically reflects the change in unemployment. The reason why we're talking about today is last week they recounted the unemployment rate based on the birth-death model. And then there's also data and chatter coming out that maybe another additional 1 million jobs do not exist. And that is because of the PPP fraud. So if that was the case, we could backdate when the recession is going to start by a couple months here. So we're probably right in there right now, Phil. And I think that's why the Fed and Powell at Jackson Hole basically said time to cut rates. I think he would have liked to held off, but once they confirmed that the SAM rule now is in place here, it looked like an idiot trying to argue against something that has not had a losing trade, if you will. And so it's a 100% correlation. I mean, this is, you don't get any better than this. And there's good reason why is because companies lay people off when they're not selling enough. And it's really accelerating. I mean, the job losses are accelerating across all sectors now, Phil. Unemployment, there's their chart that we probably should have showed. The continuing claims are rising too. And so that means when you lose your job, you're not getting a new one very quickly. And the prices paid to live are skyrocketing. So I just feel really bad for the people losing their jobs. I mean, people are on knife's edge right now. I think it's going to turn into some civil unrest as we move forward here to try to right this ship. But I don't know what they're going to do. So I'll throw it back to you, but got to be prepared. Guys, September, when they cut rates, Phil, I don't know if we're going to talk about it later this week, but there's a window of euphoria before the 30 to 40% stock market rollover happens over the next 100 weeks. So stay tuned. And the faster the rollover, the shorter it will be, but the more painful it'll be too. So I'll throw it over to you, Phil. Get prepared. I'm already prepared. I can care less if I lose 5% on the upside on a blow off top. I'm getting myself ready to be defensive here. Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Yeah, you're right. There is a bit of euphoria usually when that first cut comes, but it's not a good thing, right? But that's why markets run up to it. So it's a good thing in a very short window, like you said. But yeah, the SAM rule doesn't fail, right? Now, I heard some arguments that, well, lately the payroll growth has been robust enough to negate the SAM rule, but I don't buy that. I think wage growth, if you look at the wage growth charts, which we don't have up, they're in the toilet. Okay, so Houston, we have a large problem here. So we're not going to see GDP expansion or anything like that. And I just think that this is really falling into place in terms of how things were shaping up into 07. So I'm not expecting this to somehow magically not become a recession. I think it's going to be, but I think we're already there in many parts of the country. A lot of the comments that we get nowadays, especially whether in the room or even on the videos, it's not like it was a year or two ago in terms of, well, we don't see it. When we started to first see the cracks in the dam, the lag effect, right? People weren't immediately seeing that. People were still traveling and this and that. But, Bob, I'm looking at things like a little different than what we're talking about here, but I've been researching some real estate things, and there's a giant wave of people that haven't paid mortgages in several years because of the moratorium, right? So people were in trouble leading up into 2019 and 2020. And I've always said that I think that ultimately was running cover for the economy about ready to implode and banks ready to implode. So they printed a bunch of money to kind of get past that. But people, even back then where we had a wave of foreclosures. So then now they had that moratorium. The banks are now finally getting back to getting these guys out. So you have a whole bunch of people that haven't paid mortgage, I would argue, in maybe 4 to 5 years in some cases. This is why people had extra spending money. If you're not spending $1,500, $2,000, $2,500, $3,000 a month on your mortgage, you're going to Disneyland. So it was basically an illusion, if you will, a mirage. And now we're definitely getting back to reality because that's done. Those houses are being foreclosed on and people will be kicked out. So it's an interesting thing that we went through. $2 trillion of handouts, no consequences because you weren't getting kicked out or you didn't have to pay your bills. And we got inflation as a present. It's all coming to an end now. So the question now to me is how long and how deep this recession goes. You get a lot of sentiment that people go, well, they won't allow it. Well, then that's the first time in modern economic history that they do that. And if they do that, your inflation monster is coming right back. And then the Fed's going to look incompetent. So I think the Fed's going to dig in a bit, but you can also know that we can have disinflation even when rates are dropping. And they have a big runway now, all right? They can do quarter point and half point cuts for a while. They could do it for several years if they do once per quarter, because we're up here over 5% or so. So I think we're going to be in for some pain. I don't buy the fact that they won't allow it. I think they're going to let it come down. They're going to let disinflation happen a little bit, get asset prices down. Housing's certainly going to come down. If you look at housing in terms of wage growth, income to home value ratio is astronomically high. I don't see where we don't see across the board. In some areas will be more, some areas will be less, but the median drop across the board, I think you have to be prepared for a 30 to 40% drop in house prices. So I just think there's a lot of things here that are coming together. The flows that are required to keep the asset prices up as high as they are, whether it's the stock market or it's the housing market, the flows aren't there anymore. And now we're going to have this rubber band kind of retract back to our median growth rate. And hopefully we'll get things kind of reset here and back to a more stable growth rate that we've been accustomed to versus what we just saw in the last couple of years.
Yeah, and we're going to talk about that tomorrow. We're going to show you how valued or overvalued real estate is and really what's going to happen when you have a rate cut in real estate too. All these things are going to probably surprise and shock you. And so stay tuned for that for tomorrow. And the only thing I'll leave you with is don't buy real estate. I'll see you guys tomorrow.
Take care.
Trade Genius.